Hello and welcome to the Tech for Climate podcast. I'm Guillaume, your host, and each week I'm fortunate to share with you stories from climate tech founders, investors, and corporations sharing their unique insights into this fast-moving industry. Eventually, like me, you will learn, discover, and get inspired by those unique men and women who are contributing to the fight against climate change, and I hope it will help you to take a step in this formidable movement. So before we start, I just want to share a few words about us, as this podcast is just the tip of the iceberg of what we do at Startup Basecamp to support the climate tech movement. Our mission is to accelerate capital deployment towards climate tech founders, allowing them to focus on scaling their solutions. How do we do that? Every day, we help founders access to resources and connection and gain the visibility they need to expand their growth. We do this in a number of ways with a membership platform, a Slack group with a growing number of founders, investors, and experts from around the world. And recently, we went one step further with the matching services to connect founders with top climate tech investors. Keep in mind that we are able to do all of this thanks to the support of our listeners and our members. So please like and subscribe, share one episode with a friend, join a community, and if you haven't already done so, make a small donation to support our work. It really means the world to us. And now, enjoy the show! Hi everyone, on today's podcast, I had the pleasure of meeting with Albert Bielinko, partner at Telstra Capital, a very exciting firm that has invested in more than 91 tech-enabled companies, of which 15 have become unicorns. Their focus is one post revenue, Series A to Series C, writing 3 to 12 million on initial checks, and working closely with founders to grow their businesses. Albert describes himself as a geek, regularly reading and researching about the energy transition. He was very early to the food delivery space, starting a business with some friends in 2011, and describes how his naivety took him on a steep learning curve. He then went on to spend time at Goldman Sachs on the finance and technology side and was an advisor to companies, CEOs, CFOs, which gave him a good grounding to become an investor. In today's episode, we discuss the transformation of Australia's energy system towards renewable resources, particularly solar power, and the challenges faced for residential adoption, such as high upfront cost and lack of awareness still existing. However, the increasing cost of electricity from traditional sources is creating a stronger incentive to make the switch. Albert also discusses Telstra approach to supporting companies that have potential to solve challenging problems at scale and how they go about supporting international expansion. In the second part of the show, Albert gives his thought on top of the 3 pieces of advice for founders pitching to investors and shares his go-to book and podcast for learning about climate and climate tech. Albert, welcome to the show. Hi Albert, welcome to the Tech for Climate podcast. I'm super happy to have you here with us today. I'm looking forward to this great opportunity to hear your story and get up to speed on what you guys are looking at with Telstra Ventures, which has been partnering with incredible tech founders building the quote-unquote future, which even more than ever today includes founders active in the climate tech space. And this is super interesting for me as we need more traditional investors with long-standing experience supporting startup and joining the game to support those founders fighting the climate change. So welcome to the show.
It's great to be here. Really great to see you, Guillaume.
So before we start, can you give us a 30-second introduction about Telstra Venture?
Great. Very happy to do that. So I'm one of the 7 partners in the firm, and we've invested over $1 billion in 91 technology and tech-enabled companies so far. We've been very fortunate that 15 of them have become unicorns. So businesses like DocuSign, Box, CrowdStrike, and Auth0. So far, one of the ways that we've differentiated the most is we've actually generated over 450 mil USD of revenue for the portfolio today. And we've done that via access to several different channels that we've partnered with. So they include Telstra Corporation, Vodafone, Infosys, Tech Mahindra, and many others. So we've been able to get our founders who've opted in to leverage these channels to help sell their products. We raised 350 mil USD for our third fund late last year, which is really exciting. So we're very actively deploying at the moment. We're typically writing about 3 to 12 mil USD for initial check sizes, and we're really focusing on post-revenue Series A to Series C investments and working closely with founders to help them grow their businesses.
So let's start from the top. As you know, in the show, we love the human, sometimes more than their resume and their LinkedIn profile. So, can you tell us a bit more about your personal story and background? I mean, what are you passionate about? What do you do besides investing, supporting founders? I mean, what makes you feel inspired or like your best self? As I always ask, who's Albert?
Yeah, so the honest truth is that in my spare time, I'm an unpaid Uber driver for my two small children. So my girls are 2 and 4 years old. We're actually planning a fifth birthday party at the moment, and so my wife and I are all hands on deck, cleaning every part of the house that hasn't successfully been cleaned in months. So we spend lots and lots of time with them. I'm really focused on my kids. Actually, I take my eldest to school. She just started kindy. I take her to school every day and drop her off 3 days a week actually, and catch the bus every time. We love public transport, so spend lots of time with them. I really enjoy exercise and running and football and things like that. So my daughter has started soccer for the first time. She's already lost her shin pads, which is pretty amazing to me. And I enjoy doing that. I'm someone who's like very geekily interested in a few topics, and for me, one of those is the energy transition. So I've spent a lot of time, for many years, learning about the energy transition. It's something that excites me. I think I saw a stat that the average Australian spends 6 minutes per year thinking about energy. So I'm extremely, extremely nerdy compared to that.
But thank you so much, and congrats on spending so much time with your family, with your daughters. I mean, I'm a dad myself, and I know how important it is, and how important in terms of time it can be as well. So tell us a bit more about your work and life experience prior during Telstra Venture. I mean, what did you learn during the journey? That journey that in a way gave you an edge to join the firm as a partner. I mean, maybe you have like one or two pieces of experience that really you can look at and say, yeah, that was super helpful for me to join now the firm.
Yeah, definitely. So, a good example is I actually co-founded an on-demand food delivery business here in Sydney, Australia, back in 2011 and 12. So we were really early into the space. Actually, it was a very clear need that no one was really catering for at the time, especially in the lunchtime slot. And we felt there was a really easy, really convenient value proposition for consumers. So some mates and I started working on that business. With a lot of excitement. There were some really encouraging early signs. And, quite frankly, I was a simply terrible founder. I was so naive about so many things. But what excited me was the customer experience. I mean, I was just really clear in my head what the future customer experience would be. And so I was kind of always striving towards that goal. But I really didn't anticipate what a subsidy battle that space would become, how competitive, how absolutely cutthroat it would be. Back then, Australia didn't even really have a venture capital industry, to be honest. This concept of giving cash burning companies money to burn more to grow. I mean, I honestly didn't even know that was a thing at the time. So I was very focused on my utilization of my drivers, and I knew at what percentage I was generating cash and at what percentage I wasn't. So it really is one of these experiences that shaped me and probably gave me way more grey hairs than I should have had at that age. I also spent several years at Goldman Sachs, actually. So my background is really on the finance and technology side. So I spent several years covering technology. I worked with some of the biggest US and Asian acquirers of technology companies, especially in Australia and New Zealand, but also globally. And so that was remarkable and just really intense, very, very interesting. And then I also spent a few years covering commodities, so oil and gas and metals and mining in Sydney. And that was during a period of absolutely booming commodity prices, like thermal coal, for example. Because during that process, I think I must have sold maybe 10 or 12 different coal related assets. I mean, I'm not proud of that fact. I know we're on a clean energy podcast, but that was the market back then. And I was sitting there thinking, at what point does renewable energy get so cheap that these thermal coal assets, may not be worth the extreme valuations that back then with a commodity super cycle that were being paid for those assets. And so it's given me great joy seeing the transition of renewables over time, especially in Australia with the growth of the residential solar industry. It's been really a phenomenon to see. But for me, my background has been working really closely with companies as they've expanded. So, at Goldman, I was really an advisor to companies, to CEOs, CFOs, management teams, helping them understand their competitive landscape and see what transactions they can do to fully fund their business and grow. And so we were, Goldman was and is a market leading investment banking practice. And so that gave me really great exposure to lots of fantastic CEOs. And I was able to see how much capital structure can also make a pretty big difference in the trajectory of these businesses. And also, frankly, the difference between doing a transaction that's a good transaction that genuinely, helps shareholders in the long term versus just doing transactions to be busy. And so it's really, now that I'm on, I've been an investor for many years now, like almost a decade, been on the buy side, quote unquote. It really gives me a very clear perspective on the types of transactions companies should do as they consolidate their industries that are actually accretive to the founders and to the investors. So I think it gave me a really good grounding and also just gave me that interest in energy.
So I think it's interesting because you covered a little bit your previous entrepreneurship experience, and then your experience in finance, and then in this commodities market, and touching point to like the energy sectors, and now with Telstra Venture, which originally is more focused supporting and investing in as a VC, traditional VC, I would say, not with the specific angle on climate tech. So what has been your driver in a way to start to look into clean and now what we call climate tech in itself? I mean, any specific aha moment that you could define as such or would recall, and in a way motivation besides the maybe huge opportunity that the whole industry represents?
It's a really good question. So we actually invested in DocuSign back in 2014, and we never used the words climate tech at that time. But one of the reasons we invested was because of the massive environmental benefits of not having to print and waste huge amounts of paper and all the water that's used and carbon that's used in that process. It's actually incredibly wasteful. And so it was one of the things that really drew us to that section. To that sector and really made us spend time there. And I mean, now DocuSign has grown to be a really significant company with billions of dollars of revenue, and it's almost become a verb. Like people DocuSign documents these days, and so they don't print things off. But back then, I mean, it was much more. It was much smaller. The whole industry of electronic signatures was probably in the tens of millions of dollars total. It was an incredibly small market back then. But we really saw potential for it to one day completely replace how transactions were undertaken. We saw huge potential in it. And so for us, that was definitely one of the moments where we just found a process that was, much better digitization process that just improved every aspect of the transaction. So we really like that. We are, as you point out, we are a generalist firm. So a generalist firm investing in digital and technology-driven solutions. So we've done many transactions in cybersecurity, in fintech, in insurtech. We've done lots in just general enterprise software. And we have done a range of transactions that include hardware and software. So, for example, we're an investor in a business called Movis that does condition and energy monitoring for industrial machines. And we've also invested in things like programmable robots companies and others. So we definitely do both. And I think over time, for me, when I was at Goldman and then also at Telstra Ventures, where I joined 8 years ago, it's always intrigued me how the scientific consensus around climate change is so strong, and yet the reaction by most people, by kind of the average person on the street, is kind of much less informed, I'd say. I think that is changing now, and it has changed really well, which is really encouraging. But that's something that always struck me, how even several years ago, it was very widely accepted that climate change was a real threat to humanity, and yet I saw so little action. So it's that whole process has really been an impetus. So we had some good results early in some transactions like DocuSign that were very, just much more streamlined processes. So we also invested in Box, for example, which is a similar thematic. And so in the last 3 years, we've been really actively investing in the category. So to give you an example, we led the first institutional round for Open Solar, which provides software for solar installers in 130 countries. And so they have a freemium business model where everyone an installer anywhere in the world can adopt their technology. They can start using it to design a solar PV installation on someone's roof and moving into full home electrification. And so they can get started, they can start using it without cost. And it makes them dramatically more efficient. So it's almost doubling the amount of quotes they can issue per month. So it's a really significant efficiency driver. And so we spent a lot of time researching the residential solar space. It was something we were intrigued by. And, I'd say in this regard, we had an advantage in the sense that Australia is the number one country in terms of per capita adoption of residential solar. So one in three Australian households actually have solar. We have 3.4 million households in Australia with solar today, which is actually around the same as the US market, even though the US has 10x the population of Australia's 25 million people. So, it is a market that's incredibly well suited for it. And so that's an Aussie company really taking the world by storm with solution. So we've just been drawn to companies that have a product that is really making a difference. And it's just been a process for us in the last few years of really understanding the depth of the problem and just very actively looking for companies that either directly reduce carbon or mitigate the consequences of climate change. We think it's really the biggest challenge of our time. And so it's an increasing kind of focus on it, especially with, a lot of us in the team have kids. And I can't lie that's also been a big part of the impetus of the change.
Yeah. But thank you so much. So before we go and dive into the Telstra Venture and the new approach that you guys have, at least on the climate tech side as well. Let's take this zoom out, and I think it's a good segue. You were mentioning like solar, and this is what we agreed on prior to the call. Is really to try to get your understanding of the Australian residential solar, in a way, success, challenges and opportunities. I mean, what can the world learn from it? Why does it matter in the context of the fight against climate change today? Maybe you can start by giving the audience your overview of the overall problem of the energy consumption in the residential sectors that it represents in terms of contribution to GHG emission in Australia, globally. If you could share some data points to frame the context, and then we'll go into the solar story after that. But really like trying to frame at first like the problem here and why solar in a way matters at the residential level.
Absolutely. It's a great question. So Australia's energy system is actually undergoing just a massive transformation, and it has been for many years now, but it's really accelerated because of price reductions and a number of other reasons. And so in particular, renewables, so wind and solar, are now the cheapest forms of energy in the world. So that's been a massive, massive tailwind. And Australia has a really strong desire to accelerate that. And the government years ago created feed-in tariffs to subsidise the really high-cost systems that existed at that time. And that really was the start, and it led to the enablement of scale for the manufacturers. And it led to lots of grassroots education campaign that really spread the word really effectively. So Australia at the moment, it's trying to accelerate and double the level of renewable generation each decade from now to 2050. And so it's a really massive kind of, massive goal that's been set at a government level, Australia wide. And Australia has a target to actually reduce its emissions by 43% of the 2005 levels by 2030. So ultimately, the aim, is to have renewables account for 80% of electricity generation by 2030, which is quite an audacious goal. So if you look at where we stand right now, actually, coal is the number one source of electricity generation and power in Australia. So at the moment, coal and gas, they account for about 64% of Australia's energy use. So coal, and I believe that number was about 70% in 2021. It's about 64% now. So it is decreasing, but it's still the majority. And the thing that's caused that decrease is really the growth of renewables in Australia. So in Australia, renewables in 2021 were 35.9% of Australia's electricity generation. So it's definitely encouraging progress, and that was up from about 32% the year before, and I think it was well below that. I think it was about 16% back in 2017. So the last few years in particular, I've seen a dramatic adoption of residential solar, really aiming for that 80 to 82% of total renewables, of renewables generating 80 to 82% of electricity generation by 2030. So, to be a bit more concrete about it, 2.7 gigawatts was added in 2022. And whilst that was slightly down year on year, it's actually a really significant number overall. And the level of scale now is significant. So of that 3.4 mil of total households that I mentioned, there's about 310,000 per year new residential installs that are occurring on rooftops. So it's really been a significant thing, a really significant movement that's occurred in Australia. It's really exciting the way now renewables, rooftop solar is now more than a quarter of Australia's total renewable energy generation. So as a category, just rooftop solar alone is very, very material of itself. And really what we're fighting against is the burning of black and brown coal at large power stations. So coal itself, if you take coal as one group, and Australia is a very significant exporter of thermal coal. It's the number 4 largest exporter in the world. But in terms of internal use, so the usage is about 55% of generation from coal, with gas being number 2, and also being a really significant source. So overall, we're seeing some really positive tailwinds. Batteries in Australia are very, very early stage. So in 2022, we only saw 50,000 battery installs. And that compared to about 34,000 the year before that. So we're still talking really low numbers of batteries, because obviously they're still quite uneconomic for residences. And overall, the attachment rate of a battery is about 1.6% to a household that already has rooftop solar. So over time, you would expect that number to increase dramatically, especially as costs come down of batteries, so as they heat that learning curve and really can build at a massive scale. And then also as warranties increase. So I think warranties is also a big driver of the length of warranty is a big driver of households' willingness to invest. So overall, it's been a really, really significant change in the market, and the government adoption has been one of the biggest. Government support of initiatives has been one of the biggest things that's really moved the sector along. You asked about some of the challenges and that whole journey of getting us to 3.4 million households. So I think in the early days it was actually very expensive. So I mean, I remember when my dad got rooftop solar many years ago, and it was a very expensive, very high upfront cost. The financing models were still a little bit less mature, much less mature than they are now. Where now there's lots of financiers in the market that can make something zero upfront cost. That wasn't the case back then. And then there was also a really strong education requirement. So a lot of households were simply not very aware of what rooftop solar was. Even contractors were not that great at explaining it back in the day, and it was a large purchase that had lots of complexity to it. So it was just something that was very challenging back then. And then also just even technical things, so ensuring that the panels were in the best location or were in the optimal orientation was something that wasn't yet perfected. They didn't have the right software to really empower them that's now available with Open Solar. And just the actual power factor that the panels themselves had, like the panels themselves were much larger. And so a lot of households were just not as suitable back then. And then finally, grid connection was also, it took a long time. It was much harder, and there was a real learning curve. And I think those issues have really improved dramatically. So we've seen, what's really made a difference, like why, I guess taking a step back, like why did it work overall? I'd say one of the biggest reasons is government support. So the government provided really strong feed-in tariffs, and that's been gradually reduced over time. So like even year on year, you're seeing the feed-in tariff drop by several $100s for a typical system, up to $1,000, which is meaningful for a household. And so, and that kind of mirrors the decrease in system cost that's been experienced. I think the governments generally did quite well with awareness campaigns as well. So I think that's something that generally many groups globally can and should keep investing in. And there's actually even some Facebook groups that are really active today that are a really great source of information, like peer-to-peer knowledge sharing and quality assurance, I guess, for the people considering solar, and just people helping each other and people really getting up the curve and understanding the benefits really clearly. That's been a really strong driver of the space. And we're seeing also, I mean, Australia is also an extremely lucky country. We have an abundance of solar. Radiation in Australia is really strong. So I do genuinely believe that Australia can be a solar energy superpower. So not only is the adoption today really strong, but also the ability to export some of that sunshine to globally. There's a project called Sun Cable that is trying to do that, to export Australian sunshine from the Northern Territory to Singapore, for example. So being able to transmit some of that energy and projects like that. So I see a lot of opportunities there. And we're really excited to invest in some of the companies that are really driving that change.
So, speaking a little bit about like solar panel technology, I mean, which are the companies producing those solar panels back then, and then as of today, is it like produced inland Australia, or is it like produced in China or other countries? I mean, how is the market organized, and how did you see like the price evolving along the years?
Yeah, so the OEM market, the manufacturing market, is an extremely competitive market. But today, approximately 80% of panels are manufactured in China, of those that find their way onto Australian rooftops. And even Canadian Solar is manufactures in China. So even with some of the brands that may not sound Chinese, often they're not Chinese. And a lot of these manufacturers, they have been doing this for a very long time, for many decades now. Several of these companies have gone into insolvency and had, they took on too much debt because they debt financed a lot of their facilities. And so you have seen a shakeout of some of the industry, but we've seen a bunch of them, persist and really become really strong kind of players in the Australian manufacturing sector. And I think Solar Quotes is a really great site that a lot of Australians use to get quotes. Open Solar also has a lot of information on this as well, although obviously they're focused more on software contractors. But essentially, the market is organized with many different manufacturers, and they're all vying for competition. There has been a lot of change at the top, but now it's fairly commoditized, I'd say. So, I mean, all of the solar panels that you see, I mean, they typically have 21 to 22% conversion efficiency. And if you actually go through the exercise of comparing, there's definitely small differences here and there. And you might go for one because sometimes one will offer a longer warranty. Like you can get 25-year warranty often. So they have small differences around the edges, but generally, I'd say if you stick to one of the probably 15 manufacturers that has a good track record in Australia, I think you'll have a really good experience. On the inverter side, there are less players in that space, but equally, it is a space where there's now lots of high quality producers. So overall, I'd say I'd characterize those markets as fairly mature. There is an Australian company called SunDrive that we're not an investor in, but it has what looks like a very exciting kind of uh, proposition that they're trying to build. So I believe they're trying to create solar panels with 26% efficiency, which is obviously great. So that efficiency really makes the most of the limited rooftop solar that some households have. So that's an exciting development. But overall, I'd say we're definitely in the maturity phase of this industry.
Mm-hmm. So taking a macro approach and stepping back for a bit, I mean, could you tell us, like, and to the audience, according to you, what have been the Australian advantages and weaknesses in regarding this residential solar, like, mass adoption in a way, and how would you compare Australia versus China was very active as well, and the US and maybe the EU? Like, what are the lessons learned that should be shared with other countries that would like to reach that level of adoption?
Yeah, so I'd say China is a very significant producer of renewables. It's a as I said, it's the largest manufacturer by a long way of solar panels and inverters as well. So it's a very very significant country in that space. They have most of their electricity sourced by coal, thermal coal that keeps climbing very significantly. They have committed to reducing to getting to net zero by 2060. So it is still a long way away, but they are still building some coal plants today, which makes it quite hard given the lifetime of these coal plants. So overall, it's a huge economy. Obviously, they're growing, they're improving their quality of life, so they have a really strong need for energy, and so that creates a desire to get as many energy sources as possible. But overall, I would say that China, what happens in China, and then also in India, which is a massive economy that's growing really significantly, I'd say what happens in those two markets is really, really important to the outcome on climate change. And in the US, so the US has been, there's been fits and starts in the US. Unfortunately, in the US, the cost of a solar installation is probably about 3 times the price as Australia on a per capita adjusted basis. So solar is much more expensive there. And part of the reason is far fewer homes actually have solar today. And so you just haven't seen the scale that you really need. But also the soft costs are much higher. So small things like the painful process of getting approval to actually connect your solar system, the requirement for many more site visits. So like that whole market, there's lots of opportunity to streamline it. And the founder of Open Solar, Birchie or Andrew Birch, has actually created a not-for-profit that seeks to streamline the process and automate the approval process in the US to really reduce the cost of solar for a household. Because in the US, you pretty much have to get solar financed. I think 80% of systems are financed in the US market. So you see less people able to pay on their credit card or even pay with cash out of their pay run or cash reserves that they might have. And so overall, I mean, we would obviously love to see those soft costs decreasing, the ability to get jobs done much more efficiently, and that will lead to really great outcomes. So I expect in the US in the next decade we'll see tens of millions of homes electrified. We'll see tens of millions of solar rooftop PV installs happening. There's about 160 million households in the US today, and about 3 million have residential rooftop solar. So I think we could end up with a number, many, many, many multiples of that number. And so that gives me a lot of excitement. The EU is also facing, with the energy crisis that they went to, they're seeing really strong demand for solar. Open solar is getting adoption globally from many of these markets, and we can see it really clearly in their numbers as well. So the UK, Germany, many places like that, Spain, Denmark, they're seeing really strong pull for solar, and so we're the energy crisis that occurred, the greater desire for energy independence with the war. There's a very sad war in the Ukraine. That has created some real tailwinds to that industry, and so we're seeing a move off gas. We are seeing American gas companies also increase their exports there, but we're seeing really strong adoption of rooftop solar as well. So we think there's a huge amount of opportunity globally. And I think Australia will continue to grow well, but they already have very high adoption. But that number will still grow massively, even from the 1/3 of households. And then we're really at the start of a gigantic S curve in many other parts of the world. So we're really excited. And then we think that really reducing the soft costs is really important. The educational programs that I talked about. I mean, the great thing is there's so many really smart and motivated people in America that are really excited about the electrified future. And they have committed with the $369 billion Inflation Reduction Act. That will have a multiple effect. It's not just that 369 bill, it will have a multiplier effect throughout the economy that will really drive a transition with the EV credits, for example, and the credits for solar being extended. So we think there's extremely strong tailwinds. And we're extremely excited about what the market holds.
Mm-hmm. So you mentioned that the adoption is so high in Australia, but there's still this, I would say, residual percentage that is not achieved to reach, with this theoretical goal of 100%. So what are the major constraints that you have identified are still paving the way right now to really get this fully 100% residential solar adoption within every Australian household? I mean, is it a need of extra policies or access to fundings for those residential, or there is places where unfortunately solar is just not possible for this type of buildings as of today?
Yeah, so I think that unfortunately, the macroeconomic challenges we're having definitely do have an impact, and they have had an impact. So as interest rates rise, obviously the cost of financing everything becomes a lot more expensive, and so the payback period on a new residential install is longer. I mean, it's still very attractive today. I think you could get. Most people, you would probably see a 6 to 9 year payback on your residential solar system. And overall, that system, you might get a warranty for 25 years on the panel and maybe 10 or 15 years on the inverter. And so, you'll as an investment, I think it's a really strong, probably a 20% IRR. Internal rate of return type of investment. So it's a really great place to allocate capital, but it really comes down to access to capital. And, I'm very cognizant that a lot of people are suffering through this macroeconomic environment. It is much harder to get the financing today. I think approval rates have dropped quite significantly. So I think that from an economic point of view, just the general unease that exists makes it harder, as it does for any large purchase. But overall, the cost of electricity, so the actual cost of running your house today, is increasing. I mean, we're seeing some of the largest utilities increase prices 20% or more annually. some as high as 30 or 40%. So these are really high changes, really large changes to electricity prices, and I think that will continue happening in the future. So there's more and more of an impetus to get as much energy from the sun in a renewable way as you can. So I think overall, I think a stabilization of interest rates will help. Not only did the increase hurt, but just the 5% increase in 12 months creates a lot of uncertainty and creates a lot of challenges with a lot of the financing companies changing their offering and pulling offers from the market. So there's a dislocation that really occurred there. So I think that is definitely one. I think overall, like making it accessible to more and more people and businesses. Where I've heard of innovations such as a company that has a flexible solar panel that is able to fit on roofs of warehouses that are a bit more flimsy, for example, so more flexible. Something like that could open up parts of the market that might have struggled to get the level of adoption, the number of panels, or it might not be a suitable material. So there's definitely, I think there's a business called that's focused on that innovation. So I think there's lots of different niches like that. I'd say that renters, like, figuring out a way for renters within shared properties to be able to enjoy the benefits of solar. That's a really important point as well. So there's an Australian company called Loom Energy that is basically offering a way for buildings, like homeowner associations, to introduce solar into the whole building and then share the solar appropriately. And there's also American companies that are seeking to do that. So that part of the market is really in its infancy. Sadly, today most renters don't have the benefit of solar unless a homeowners association kind of decides to get it on their own kind of will, and then having to figure out a way to share the costs kind of in a more kind of difficult way after that. So it's that part of the market. There's clear opportunity, and I think there's lots of different niches like that. But I'd say that just getting solar on the tens and tens of millions of rooftops that actually can get today, and just simply making it a lower cost proposition is the most important thing today. Like these are really all critical problems. And then I'd also point to education and training of the workforce. Like we need a lot more electricians. Like the electricians are going to be incredibly busy in the next decade or two. In addition to Open Solar, we also invested in a US business called BuildOps. And BuildOps provides software for commercial contractors to let them run their business. So that includes HVAC, plumbing, electricians, etc. And so we believe those people will be extremely busy electrifying. They'll be busy making changes to commercial properties. And so supporting them with intelligent software that helps them be more efficient is a really large opportunity. But overall, that training market is it's hard to get enough electricians. Electricians are really busy all the time. It's hard to even staff trainers to train more electricians. Like literally, a bunch of them will start and then get poached, or they'll retire, and there's just real shortages in that space. So I do think there's lots of opportunity, and there are a few companies that are investigating that area. So I see a lot of opportunity there as well.
So to close this section, if you look at the end of the value chain of the solar in itself, like what is the current companies or like the rate also in adoption in terms of like recycling all of those millions of solar panels that in the near future and as of today are already coming into their life end in itself. So what is the plan there, and how do you see the market there?
Yeah, so I must admit that's a space I haven't yet done a deep dive on, but it is an incredibly important problem. And I think we're seeing in Australia some really early stage companies that are being formed around recycling of panels, because some of the panels that were 10 years ago were put on rooftops, and now is the time where a lot of them are starting to fail and they're just getting less efficient. So there is a degradation that occurs. I think it's around 0.5% per annum overall in efficiency that occurs. So, there's a real degradation that occurs, and then being able to recycle and get the benefit of those commodities and metals again is very important. I'd say this is probably a phenomenal time to start investing in that space. But overall, it's a space that today I'd say the volumes are low, but it will be absolutely critical tomorrow. Another space really, I see similarities with that is supporting the grid, like creating a lot more stability to the grid, because as you add more renewables, it creates a system that's a lot more dynamic and a lot more complicated for the grid to deal with. Obviously, solar and wind are not dispatchable. You can't press a button, and it's not like a peaker plant that's very expensive energy, but you can press a button and in minutes it's supporting the grid. So we're very interested as well in solutions that support the grid. We think there'll be trillions of dollars that's spent on upgrading the grid in the coming decade or two, and so we think that's an opportunity for huge investment as well. So I think they're both really great areas for further investment.
Thank you so much for unveiling so much interesting insights on the Australian, residential solar market and this whole in a way success story. So let's go into the specifics of Telstra Venture. I mean, can you tell us a bit more? And you already did that at the beginning of the interview, but maybe to quickly reframe, I would say the story, the genesis of it, and this growing interest in the climate tech sector for, as we mentioned, as a traditional VC firm, which is not always the case, but more and more. So what was the initial gap that you saw that led you to more interest in the space in itself?
Yeah, really great question. So we have a quite not a very traditional background, and so we actually started about 12 years ago as executives at Telstra Corporation, which is Australia's largest telco. It's also Australia's most valuable brand. So it's a business that has about 18 mil mobile services in operation. It's a very well-known company in Australia, and then globally it operates in 20 other countries, for example, lots of parts of Asia as well. And so we started off investing in some of the software companies that we saw were growing quite significantly. And then in mid-2018, we actually did a spin-out of the firm. So we created our own firm that's independent, and we rolled those assets that we'd already invested in that hadn't already exited, and we raised a lot more capital, about $265 million USD of new capital, and then we started investing out of that fund two notionally. We also raised some, we were also able to bring on board some really excellent new limited partners or LPs for that fund. So they include lots of pension funds or superannuation funds. We also added a European corporate that's also extremely interested in climate. We've added 20 family offices, and we the investing partners also invested heavily personally in the fund as well. So that was our genesis. And so late last year we raised a $350 million USD third fund as well. So we added about 30 new limited partners as part of that, and so we're very actively investing now. And so with climate tech, so we think we see huge changes occurring in the world, and we like to invest our capital into where we think we're at the start of an S curve that can create really enduring companies, that can create companies that are solving some of the hardest to solve problems at scale. And so investing in things that maybe they're small today, but in the future we think they're going to be a big deal. Another or even a sector that's really in transition. So there was a legacy solution that wasn't quite ideal, and then there's a new solution. So we were an investor in CrowdStrike, for example, which really reinvented endpoint cybersecurity using machine learning, and they've grown to be a 30 or 40 billion market cap company. So they've become a really significant company in that space with $3 billion of annual recurring revenue. And they've really disrupted that market from incumbents like McAfee and Symantec. So we look for giant changes that are occurring, and we try to find founders we think have a vision of the future that really excites us. So it's like a vision that maybe to other people seems a bit crazy, but just a vision for how you can make sense of the madness and ultimately deliver a much better customer experience. And so that's what we spend time doing. We spend a lot of time talking to customers, like very early customers of these companies, understanding their challenges, understanding where the opportunities lie. And through that we really understand what something could be. So we love to dream with founders. And so overall, one of the ways where we're really different is we've generated over 450 mil USD of revenue so far. And so that's been a really important part of our story as well, where we're really working side by side with the founders as much as we can, that we're actually helping rather than hindering, but actually helping them by finding additional revenue. And like we think, particularly in a very challenged market, the value proposition of an investment partner that it can actually bring revenue and bring distribution, it matters more than it's ever mattered before.
So I think that's a good segue for my next question. I mean, we all know that founders are looking more than capital when they decide to, in a way, get married with some of the investors. So what do you offer to founders that you invest in? And you're just mentioning that, but often it's like, what are the challenges in a way that you find are specific to climate tech, founders versus the traditional tech startups that you have been backing so far? I mean, for like the one that you are starting to see, like how are you planning in a way to support those specific challenges that you see that are inherent to that space per se?
Yeah, it's a really good question, and I'd say that climate tech kind of it takes on many shapes and sizes. There's many different types of climate tech. Like, so a business, for example, doing direct air capture and literally trying to suck carbon from the sky, it's very different from another company. So, for example, we invested in Rethought, which is a flood insurance technology company. So they're on the mitigation side, and what they're trying to do is they write flood insurance policies using climate change data on every single property in the US. And so they actually assign a resilience score to every property. And they've won multiple awards doing this as well. So they've been able to achieve much lower loss ratios than incumbents. And so for a business like that, we really work as a business partner and a confidant of the founder. We'll work and help her or him really advance their vision. We'll be a sounding board. I'd say overall in climate tech, the space sadly is not moving fast enough, and often that means also more capital is needed. So we help them assemble the right capital partners. It's also a space where getting early confidence of customers is really critical. So the first customers you get, these can be really significant kind of bets that they're making. Like they're really having to believe the vision often. And so a partner who is trusted by customers as well, who can introduce the right customers and that take that leap of faith, I think is a real value proposition. One really concrete thing that we offer is the ability to expand geographically as well. So we have a very strong presence in Australia and Asia Pac. And so, for example, we've helped some of our companies set up offices here in Australia. We've helped them hire people. We've helped them find their first customers. We can literally introduce some of the developers. There's many carbon developers in Australia. We can make introductions like that. We can introduce utilities. So, I mean, a lot of it is really leveraging our extensive network and finding the right people to help a company grow. And I mean, we've always felt getting customers really makes a difference. And then finally, hiring is a really important delta. So we invest quite actively in finding the right people. Sometimes that's to lead an Australian or Singaporean office for a founder. We've also invested quite aggressively in data science as well. And we have a capability where we can send a founder a list of potential people to hire that they can consider in their network or in our network or broader. And so literally, if they like, often with climate tech companies, there's huge interest for the roles, but some of them are really hard to find. They're very specific roles. For example, if you're talking about someone that scaled manufacturing to a significant degree, we have the capability to unleash our data science to find really great and to find candidates in that space. And we actually have a 4-person team that does that, and then a 2-person data science team that really supports our founders in that. So overall, I mean, we offer founders a lot of different things, and we try to connect them to the right people and offer strategic advice to help them with the challenges. It's a long road, and we need, resilience is really key.
So, if you could share maybe one or two sectors that are the most promising for you today in terms of what I call impact cash return or ICR, meaning building impactful companies while creating highly profitable business. Do you see maybe one or two underdogs or subsectors area that you're really excited about today? And you mentioned
Yeah,
already a few of them during the first part of the interview, but maybe if you have one or two more that quickly you could share with us.
yeah. Do you mean in climate specifically, or beyond that as well?
No, really like on the climate side
Yeah.
as well.
Yeah, so Open Solar, I mean, I've talked about them, a fair amount here, but Open Solar actually donate 1% of their revenue to various charities as well that support the adoption of greater residential solar, especially in places like Africa. And so they do actually a lot of work to really lend their expertise, lend their software, lend their network to make communities successful in Africa. And then I've already talked a lot about Rethought, but I'd say they've got a really big impact approach as well. So I mean, the impact of kind of being able to isolate those places that are most likely to be impacted by flooding, the data engine that they have, like they're using that today to write policies, but I'd say. Over time, there's a really big climate equality aspect. So, unfortunately, the people that have generally created climate change are not the ones who are going to suffer the most, and often the ones that suffer the most are the poorest. And so I'd say leveraging technology like that to kind of find ways to help those that are most likely to be impacted by climate through bushfires is really important. There are some exciting companies around operational resilience, so things like being able to predict a bushfire or a drought and use that as a data product as well. I think that's a really strong element. We're seeing companies in that space, but probably none that I'll name right now, but we're definitely seeing companies like that are having a really strong impact approach as well. So enabling people to vacate homes before the worst impact of a flood, for example.
On the other side of the spectrum, maybe one or two sectors that you guys are not interested in or don't feel, any. And again, on the climate tech space per se or industry, I mean, which one do you think are more like greenwashing or waste of time and resource? No need to name any
Yes,
companies, but it's more about like, we like to understand what is exciting and what is less for each
yeah,
investors.
yeah. So I'd say probably most investors treat offsets with a bit more cynicism, and we think there's some really exciting opportunities to kind of improve that situation. But at the moment, unfortunately, a lot of the offsets that have been issued by some of the 4 main standards in the area of carbon projects, unfortunately, a lot of them seem to not be additional and not really be effective in actually creating a better outcome from a climate point of view. So I'd say we are cynical and we think there are real problems in that space, real integrity issues. And so I'd actually say there's also opportunity there, right? Someone can come along and improve that situation dramatically. But today, I'd say if you're buying offsets, there's reason to be really, really quite cautious. And we're seeing Delta Airlines be sued for more than $1 billion of offset purchases that they made, along with a campaign around how they were the only net negative airline, and they achieved that through buying very cheap offsets. So I think cynicism is warranted there. And then finally, I mean, we think that the whole nuclear SMR space is very interesting, but I'd say it's probably an area we're less likely to make an investment simply due to capital reasons. I'd say that's an area that's extremely capital intensive. And I mean, I've been following NewScale quite closely. I think that sector is intriguing. NewScale is one of the kind of leaders in that space, and unfortunately, their costs and timelines just keep getting pushed out. Unfortunately, so I'd say overall that like that is a technology that will help us, but it just seems like it's extremely expensive, and it will probably come years too late as well. So I'd say also there's opportunity as well. Like whilst we're talking about things we're not excited by, like ultimately if founders can find a way to innovate through these challenges, there's huge opportunity as well.
So how do you guys measure impact in comparison of other firms and clearly like are more like a traditional VC firm, but now starting to invest and looking to the climate clean tech space? Any like criteria that you have in place or framework or any team of scientists that you're relying on to kind of like assess that part as well?
Yeah, so we do pretty extensive reporting on this. ESG is a really important part of what we do, and every single investment, both at the initial investment before we invest, and also over time as we assess a company, we're really focused on their metrics around ESG, on the actual impact they drive. And so we work really closely with the founders on things like trying to improve the equality, having more female representation, like having more varied views. Sadly, boards are extremely dominated by white males, and that's a very unfortunate thing. But we're doing a lot of work to try to source female candidates for board positions. We've actually created a female leader roundtable as well, which is really focused. I think we've had 2 events so far where we've linked together dozens of some of the most impressive founders and executives in our portfolio, and we really use that to create hundreds of other connections that can help find really excellent leads when our companies and other companies are hiring. So we're really seeking to put that into create a real impact from that. We do donate 1% of our, we're part of the pledge. Our firm is part of Pledge 1%. So we actually make significant donations to various causes that we're excited by that include things like coding for women. We're also an investor in a company called Springboard, which we think is the largest private online school focused on digital skills. So you can do 6 to 9 month immersive courses in skill gap areas like data science, for example, and every student gets a mentor. And so with them, they actually have lots of discounts for women, and so we've worked really closely with that as well. And so we're also introducing them to others in the ecosystem that can work with them from a not-for-profit point of view and get more people who are disadvantaged through their program. So we think that's really exciting. And then we also do hire experts as well from time to time. We will quite often we'll retain an expert that will help us through some of these issues. We've done that on climate deals in the past, and part of the mandate is around really assessing the impact of the technology. So we love technologies that democratize and make something a lot more accessible.
So what's next for Telstra Venture?
Yeah, very busily investing the 350 mil US we've raised. So I think we've closed several new investments in the last few months. We've had 35 exits overall as a team. We've been able to return more than 600 mil USD of cash to our LPs so far, which is not, it's a drop on the ocean overall, but we've been excited by the progress. So I think what's next is just finding founders that are really making an impact on climate. It is a top 3 area for investment for our firm, so I expect us to do a lot more investing in this space. And I'd love to see us be a partner to some of the companies that make the biggest impact in the space.
A little bit more personal question here, but what's your personal view on the climate crisis? I mean, what would you say to people who feel demoralized or anxious with all the already visible consequences from climate change? I mean, are we doomed?
Yeah, it's a really good question, and I must admit I sometimes have good days and I sometimes have bad days. I mean, it's seeing the charts coming out is really alarming to me. And I'd say, overall, I try to focus on the things that we can do that make a difference, rather than kind of being crippled with fear. And like one thing that actually gives me a lot of reason for hope is that if you look back kind of a century plus ago, it was actually widely predicted that humanity would run out of food. So back then, populations were growing and farms were very unsophisticated, and so that was the prevailing view, that humanity would actually run out of food and kind of self-destruct. And then two German physicists in 1909 created ammonium nitrate, and that innovation 5x the per farm productivity globally. And so markets like the US and Australia, the farms scaled up dramatically in output, and that obviously we haven't run out of food. And so I'd say we will see innovations like that. I mean, what gives me comfort is seeing some of the smartest people in the world choosing of all the things they can do to work on this. I mean, to give you an example, like one of the early executives at Open Solar is the former CMO of LinkedIn up until the IPO. And this is a great person who has a lot of different options, and they're choosing to work at a company that can make a real difference to the climate crisis. So I'd say, focusing on things you can do is really important. And I'd say electrification and all the technologies we've been talking about, they are going to create a world of abundance overall. Like overall, if we can get to almost a zero cost of energy, and we're already seeing this in the middle of the day, like in the middle of the day in Australia, you have to pay people to take your solar. It's free or negative cost. And so I think there's going to be huge abundance that's unlocked by that. And we're combined with some of the advances that are happening in AI. I'm actually very excited about the future. I'd say we need to be investing really extensively around helping mitigate the consequences, because they are going to be real. But I also think some of the founders today are really doing amazing things, and there is a world of abundance around the corner.
How can the community of investors, founders, experts listening to the show today can help you?
Yeah. Oh, help me. That's very generous. So just send me all their future unicorn deals, please. That would be really great. I'll just sign, wire the money, and we're done. More seriously, I love to connect with people who are really deep in the space. I love to meet experts and founders who are really innovating. I'd say follow me on Twitter, send me an email. It's albert at telstra-ventures.com. I'd love to collaborate, and if you hear of particular ideas that can move the needle. I think overall at a global level, we have 50 to 60 gigatons of carbon to remove annually. And so I'd say that if you see a technology that can get us 1 gigaton, if things work out, I mean that's going to be exciting. So I'd love to collaborate with the ecosystem.
Any question I should have asked you that I did not for this first part of the interview?
No, I thought it was good.
Thank you so much, Albert, for your time, incredible insights, and I'm so excited to see so many amazing people like you really putting so much time and effort and resource to build a better future and a cleaner and greater world. So thank you so much for being on the show with us today.
Thanks, Guillaume. Really appreciate it.
Thanks again for joining us on the Tech for Climate podcast. I hope you enjoyed the show. Stay tuned next week for more climate tech insights. In the meantime, head on over to our webpage at startupbasecamp.org, where we have lots more insights and resources for anyone wanting to get involved in climate tech. If you find our resources useful, please consider donating to support our small self-funded team. Don't forget to subscribe and share with your friends. And see you next time.